Welcome to RBC's Markets in Motion podcast, recorded January 27th, 2025. I'm Lori Calvasina, head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. The big things you need to know. First, 4Q24 earnings season looks solid on the stats so far. Second, bulls bounced back in the weekly AAII survey last week as U.S. equity flows stabilized a bit. If you'd like to hear more, here's another 5 minutes. Let's get right to it. Takeaway number one, we're seeing solid stats to start 4Q reporting season. So far within the S&P 500, 82% are beating consensus forecasts on earnings and 63% are beating consensus on sales. These stats are even better for the Russell 2000. Stocks are also behaving logically, with earnings beats outperforming in terms of immediate price action post-results while misses are lagging. We've seen some modest downward revision pressure on bottom-up S&P 500 consensus earnings forecasts, which are now tracking at 273 for 2025. There's nothing alarming about the pace of downward revisions, which still look mild relative to history for the S&P. The stronger U.S. dollar seems likely to keep this pressure on for a while longer. Our team continued to read through S&P 500 earnings call transcripts last week, looking for insight into the macro backdrop. The takeaways we discussed last week remain intact, and to be honest, we didn't really learn all that much in the way of new information last week. General outlook discussions continued to emphasize uncertainty and optimism, with some companies highlighting steady end markets and others highlighting mixed end markets. Descriptions of the U.S. consumer ranged from strong to variable, with low-end weakness and value consciousness highlighted. The labor market was generally viewed as strong, with some companies noting their own headcount had been stable and others highlighting some purposeful contraction in their own workforces. Views on labor supply were mixed. Domestic policy discussions expanded on reasons for optimism, regulation, M&A, tax, and improved business confidence, as well as uncertainty, specifically tariffs and immigration. Tariff discussions tended to emphasize a wait-and-see approach and learnings from the past episodes. AI discussion was more prevalent, with companies emphasizing that data centers and generative AI were still early days and positive impacts from this theme on current demand. FX commentary was also more prevalent, with pressures from a stronger dollar highlighted. Several companies noted strength in Asia-China generally, but several also called out weakness in the Chinese consumer. Wrapping up with takeaway number two, what's jumping out on vibes and flows in our high-frequency indicator updates? Net bulls bounced back on the weekly AAII survey last week, up to 14% on the unadjusted weekly data point, taking the 4-week average back up to minus 0.7%. The recent dip in the U.S. equity market saw the S&P 500 fall to 4.3%, below its December 2024 high, just shy of the 5% level that we consider to be a true pullback in the index. At least through Friday, the bulls appeared to be back in charge, taking their cues in part from the belief that tariff talk from the new administration would be more bark than bite. We continue to keep a close eye on the University of Michigan Consumer Sentiment Survey, which came out on Friday, capping off a light week of economic data in the U.S. There have been some interesting divergences in trend under the surface in this survey in recent months, with improvement in men, lower income, and lower education cohorts, and deterioration for women, higher income, and higher education cohorts. The disappointment seen in the headline data last week was noteworthy to us, not only because it was unanticipated by market participants, but because we also saw the improvement that had been underway for men, as well as the lower education cohort, reverse course, lending support to the idea that the deterioration in sentiment did have some breadth. And finally, the biggest thing that jumped out in our funds flow work was the emergence of some modest improvement in flows for U.S. equity funds, including growth and value, small and large. We also saw this stabilization in developed market momentum funds flows, and flows to a variety of developed market non-defensive sector funds categories, particularly financials and industrials, showed some stabilization in trend as well. These trends overall provide some tailwinds to both the old and new leadership within the U.S. equity market. That's all for now. Thanks for listening, and be sure to reach out to your RBC representative with any questions.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.